What is good, guys? We're back again with another video. Today we're back again with that bonnet because I've been sick for quite a long time, so I thought I should make a video just updating you guys about where I've been and to look at the market, of course. Now we are in the fourth quarter. I don't know who is still trying to chase those trades because it's not worth it. Do you know what I mean? But anyway, you can do what you want. But today we're just going to look at like something that is quite simple. As you know, we are very much simple traders in this channel. We don't complicate anything. So if we looking at the markets lately, right, we do see here that we have been pretty much going to the upside because obviously the dollar is dropping, okay? But we have all those in news as well, those fundamentals, CPI, and so on and so forth. So looking at the market here and as to how I get to catch a trade from last week on my Instagram, like people ask me like, how do you hold trades for over 2 to 3 weeks? Yes, you are a swing trader, you are a scalper when you feel like it, but when you hold trades for 2 to 3 weeks, bro, like what is going on with my vocabulary? For 2 to 3 weeks, how do you do it? And I said, you know what, it's not simple. When I started, I was struggling as well. Like 2 years back, I'm telling you, I was struggling myself. But then I got to understand my style and I then stopped depending on trading. Do you know what I mean? What you're not going to get for most people is that, okay, everybody now is a funded trader. Most of us, yes, we are. But now we're focusing now on those trades, right, on those funded accounts. But when you have another source of income, perhaps if you still have a job, you can let those trades go. Because I think what have gotten me to this position is, or where I am now, is to just let the market breathe, let the market be, let the market do whatever it wants to do. Because like somebody want to say, okay, no, like, no, I can't, like, yeah, you can, like, relax, you can. It's just that you're so fixated on the profit, so fixated on that position. Chill, get something else to do. That's why people work out. That's why this thing is discipline. Leave the desk alone. Leave that desk, let that laptop breathe, go away. Okay, so I'm going to show you now how did I get this trade, and I hold the trade for 2 weeks. Listen, I was in drawdown. If you are on my Instagram, you know exactly what I'm talking about. I was on drawdown. I was open about it. Most people will ask me questions on my message me on, or DM me rather, and I would definitely like tell them the truth that I am in drawdown, because you can see like when I've entered the trade. So this was, now we were sitting, so we were sitting now on these levels right here. Let's draw this one out. Draw this one out. So that was now on the 20 and the 18th of on the 18th of October. Okay, so we're looking at those buys, no problem. Looking at DXY, we have been waiting for DXY to drop since the end of times. Okay, let's have a look. So this is what I'm talking about. I'm gonna go to the weekly now. Okay. Oops. So this is how we got the position. So we were looking at this level right here. So when the market came here to the cells of cells, we were seeing a nice push to the downside, because we have been pushing for quite a long time, and we know DXY is not as strong at the moment. So we've been waiting for the dollar to drop. So when we're here, that was on the 2nd of October, right? So we're going to go now to to GBP USD. GBP USD, the 4 hour. Okay, because that's all I need. So what I need from there, it's a rejection. Some people will call it a demand area or rejection of the fair value gap there, whatever you want to call it. It's a rejection of a demand area. It does not matter. So we're looking at that area there. So from the 2nd of October, right here. So when the market was here, I'm like, okay, now we're ready to buy on the GBP USD. We're ready to push to the upside. We are strong. We have been waiting patiently for a whole 2 months on DXY to push to the downside. So DXY pushed to the downside. We're prepared. Now I did not enter here. So how did I get in? So the market came drop down. As you know, if you're looking at the channel, we do the same thing. So we have a demand area, this whole push, that level, that level, that level, that level, right? It's all levels of demand area. So we want to see the market coming back to that area, pushing to the downside, giving us that nice push to the upside to be able to get in the trade. Okay, so just gonna move. Okay, so this is what happened. So push, we have 1, 2, 3, that level. So the market came there. I was not interested because I did not see that nice drop to the downside. Okay, so the drop to the downside somewhere there. Okay, so you can see we had a push, came to this level, but it did not really touch it. But we are waiting for that demand area. We're not crazy about which candle did it use. Did it push to that candle? Did it reject that candle? We are following the system. The system says you come to the upside. We're using these 3 candles. If the market come there, act funny there, start slowing down that area, we come to the downside. We are preparing ourselves to enter that level or this candle right here. Most people call that demand area, and it is. Okay, so it came there. I entered there. I'm going long here on the upside. Now, most of the time, I would say target the highs. Okay, target these highs right here. But at this point, because we have been waiting for DXY to push the downside for 2 months, I knew that I have to hold for at least a month or so for GBP to push the upside fully. Do you understand? So position is, we have used quite a large stop loss because it was a very long swing of all times. So we're not expecting price to just take it easy on us, but we knew price would have to play around, do all these funny things, take people out. You know, most people thought it was still selling, but because we have been waiting for that area for 2 months, we know that it's not going to be easy. It's going to push up and down, but where it's going is on the upside. Okay, so areas of exit. Okay, so I was like, okay, the market could push the upside all the way. The upside, the entry was 1 entry, so we enter 1, 2. Okay, so we pushed around. I think my stop loss was very large, very large. They pushed around pushed around we pushed around all the way. So we're just going to pull it to the side because we wanted to see them now coming back to those candles there, because that's another area of demand there, or you can call them, areas of inefficiency. It don't matter what you call it, but yeah. So we pushed there, we pushed all the way to the upside. The market was not so kind. It was going up, down, up, down, up, down. There's a point where it came back to entry. I mean, somebody else would have said, oh my god, it's 86 pips, I need to get out. The market is pushed back to the downside. Remember that DXY though. DXY is pushing to the downside. That thing is about to plummet. So there's no reason for panic. So we push all the way. Look at that. Okay, so the entry 2nd of October all the way. I've never hold the trade this long. Actually, it went all the way to the upside. Thank you to CPI. It exaggerated the move. We ended up bagging 4%. So what happens is when I see that the market, okay, so let me just zoom this out like that. So when I see that the market is going in my favor, okay, I'm not going to hold 86 pips because I see that now we are ready to push the move. Okay, so what I do is, this was the 26th of October, so we have to bring it to these areas at least, because the entry is on the 4 hour, so those 42 pips. But when I first enter a trade, I make sure that I risk 1% of the account. So the stop loss was 86 pips because I wanted to hold for a month. But now that the market was now, as soon as I saw, zoom this in, okay, as soon as I as soon as I saw that, okay, now it pushed the first time, it came back, I'm like, yes, that thing wants to go to the upside. So I was like, okay, stop loss below these lows right there, or this one. So that's 42 pips. Okay, so we pushed all the way to the upside and we bagged 9.6%. That's over a month, if you think about it. Over a month for 9.6%. Somebody will tell me, oh, I normally bag 9.6% in a day. I don't care. Okay, it's not my problem. That's not my style. I could wait 2 weeks for it. I'm more chilled about it because I have other things to do. I can't hold 9.6% for 50 minutes. It's not going to work for me. That's how my psychology works. I rather hold longer, knowing that my stop loss is in place as well. Okay, so that's how we ended up catching that 9.6 move. Nothing special. We waited for DXY. As I can recap, waited for DXY to push to the upside on the 2nd of October. We waited for market to come back to these areas of inefficiencies. We're not going to push immediately to the upside. We always have to wait for that push to the upside, push to the downside first, and then we can get a perfect entry, as other people would say. So that was a perfect entry. The areas of inefficiencies, those who maybe scalp could go out to that area. Come out, it's your problem, that's fine. I wanted to hold for a month because I have been waiting for 2 months for DXY to come to the downside. Do you understand? So that is 9.6 on the account. Okay, if you're using South African rands and you only had 100, that was almost 900 on 0.01. This is not a joke. If you're using 0.10, it goes on and on and on and on easily. Money made, right? Just like that. So basically is patience, relax. The market comes to you. It never really, because with things with currencies, that it takes its time. It's never going to just push 2,000 pips just like that. Okay, that's why you just risk accordingly and then you relax. Okay, and that's it for today, guys. Thanks so much for enjoying the video. See you again in the channel, and cheers.